Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the video research from the ForexPeaceArmy.com. Let's continue to talk about the situation on the euro currency. Start from the daily time frame today. What we see on the daily time frame? In general, we said that our expectation, medium-term expectation on the euro currency is the reaching of the 129, 129.50 area is the nearest area of support. Well, that expectation is based on the pattern that has formed a couple weeks ago on the weekly time frame, and that is the minimum target of this pattern. Also, you could see that this is 618 support from that swing, from that low to that high. It's 129.54. It's right here. Also, that is the target of this ABCD pattern. A, B, C top, D level, 100% extension is 129 roughly. So that is the destination target. It's 129, 129.50. What we see in the current price action, we see that market has eliminated this 3.8 support level and now has reached the 618 extension target. Is around 130.60. It's right here. Now stands right at that level. Daily trend holds bearish well, so we could say that based on the daily time frame, beg your pardon. Based on the daily time frame, our overall bearish context is still valid. On the 4-hour time frame, what we see? We see the couple of extensions right here. So first of all, that is our great extension that we have just discussed on the daily time frames right here. 618 support, 618 target right here. Also, that is this recent ABCD extension. A, B, C top. Also 618 extensions stands in the same areas around 130.65. Also, take a look at this green line. That is the pivot point support 1. It's 130.48. So you can see this shadow to the upside. That was the respect of that area when the market has touched it on the first time. So that is what we discussed on the forum. That was nice momentum to add more to the position, because this was the right freight resistance level from the swing to the downside. From that swing, from that high to that low, so was approximately 3.8 resistance. Well, 4-hour time frame holds bearish as well. On the hourly time frame, we have situation that could lead to some potential retracement to the upside. Why? Because as we have estimated, that is some kind of support. It's not superb support, but still this is the support level. So this is pivot support, and market has hit a couple of targets right here. We see some hint by the market on the potential retracement by this, you could say, this divergence with the MACD indicator. Well, also you can see that market is forming currently some kind of the triangle right here. The major level to watch for in this price action is that the hourly confluence resistance 131.37, 131.43. It's right here. So around 131.35 area is the destination when the market could reach during this retracement. The next level of resistance stands around 132. So, and market, in fact, if it will really want to continue move to the downside market, and the bears are strong, in this case market should not reach that level. If this will happen, market will erase all the move to the downside, and that will put under question the potential development of this price action, since that is the minor targets. 618 extensions is not as solid, not so significant as the 100% extension targets. Besides, here we do not have any FIB support of the higher time frame. That is just a pivot support 1. So probably market could show some retracement a bit high. Maybe this will be some kind of the better flyby in that area. Market could show some retracement to that area, but breakout of this level will be unwelcome for the bear development. So that's level to watch for. If market will show this retracement and reach this level, probably could be a nice attempt to increase the position with the potential move to the downside. But personally, I have some feelings that probably market will not even reach that level, because market has reacted already on that support by this retracement. That was the significant retracement in the terms of that swing and in the terms even of that swing. That is the 3-8 retracement. That is absolutely logical value of the retracement based on hitting of just the 618 target of the 618 extension. That is enough, as we could say, as we try to assess the value of this retracement. And probably market should even continue move to the downside. I just share with the thoughts that could be useful if suddenly market will show some deeper retracement. That is the crucial level to watch for. This is really significant and solid. After hitting just the 618 target, market should not erase and break this level to the upside. Will it touch it or not? It's very difficult to predict, since currently we do not see any patterns that could point on this potential move to this level. So that's just the triangle. This is the continuation pattern. If market will form the butterfly buy here, well, probably in this case we could say that market could show some deeper retracement. But currently, I think that it's better to not count on this significant move. Well, but this still could happen by this divergence, this support, as we said. But in general, will this retracement happen or not? Even if it will happen, this will not break and will not erase our expectation on the 129.50 level. That is just the technical add-on to the potential development of the move to the downside. The one thing that I do not want to see on the market is the breakout of this 130-140 area to the upside, because in this case this will be not quite unnatural a bit for the current price action. So that's our view on the market. Just a couple of words about previous potential enter on the market. I just want to show you a bit in other software. This is Bloomberg. Here is your page. So take a look first at the intraday price graph in Bloomberg. This is the tick chart. Now we will shift to the 6 minute. Yesterday we discussed I just want to show you how you could enter after the confirmation of the trend. So I do not have this in the MACD indicator, but you will get the point. That is our entry level that we have discussed. That was the pivot point and confidence resistance and for our time frame. That is our ABCD extension. A, B, C bottom, 618 extension target has been hit. Market start move to the downside. Here a MACD indicator on the hourly time frame has shifted to the bearish side. So if you will shift to the hourly time frame, you could see that here was the shifting. You can see that area market already has shown the bearish trend. Here was the retracement. This was particular 3-8 retracement of that swing. If you will count it, it almost will be the pips to pips right here. So that is the technique that we have offered you to enter. So we said that you could enter either here, or that is safer way to enter when the trend will shift on the bearish side. So that is how this could be done. Start move from this significant level to the downside. First retracement, enter at 3-8 resistance of that swing. So that was also nice. This chart is a bit different since the quotation of the Bloomberg is much more prudent. So if you take a look at the quotes, now I will show you. Just a minute. If you'll take a look at the quote page, you will see that who is quoting. So you can see that this is the direct interbank quotes that comes from the major participants of the forex markets. So you could find here Barclays, Citi, that is the quotes of the Citi, Commerzbank, Deutsche Bank, Deutsche FX, you can see, and other great JP Morgan. So that is the real quote of the forex. Well, and here that's why this you could say that this chart of the intraday price graph and that we have just taken a look on, that is more prudent than on the MAT4 MetaTrade 4 platform. It's a bit different, especially the hourly chart. Well, that's all that I would like to say currently. So keep an eye on that level if market will show this retracement, but I suspect that this probably maybe even will not happen, since that was the respect of that area already. Market could show some will show continuation to the downside. If of course it will not show the butterfly buy pattern, that could probably trigger some retracement to the upside. So as the conclusion, take a look first at the potential reversal patterns. Here it will happen, then probably retracement will come. If it will not happen, then probably market has already respected that area and market was ready to continue move to the downside. One thing to keep an eye is the crucial levels right here. So if market will break it to the upside, that will be negative for the bearish scenario. And if market will reach even that retracement and then will reestablish the move to the downside, it will not erase and destroy our daily look. It's the potential bearish move to the 129, 129.50 area.